Good afternoon, everyone. Welcome to this presentation and thank you for joining us today. My name is Zach and I'm the Outreach Coordinator here at the Taxpayers Help Center. Today, I'm here to discuss estimated tax payments. The Taxpayers Help Center is a nonprofit 501c3 organization in Northridge, California. We operate two tax clinics, the first of which is our low-income taxpayer clinic, where we help taxpayers resolve their tax disputes with the IRS. The second of which is our volunteer income tax assistance clinic, in which we help prepare income taxes for free. We are an IRS authorized certifying acceptance agent for individual taxpayer identification number applications. I, Zach, am the outreach coordinator, and our clinic director is Masood Chotani. Today, during the presentation, we're going to look over estimated taxes at the state and federal level. And then just a few housekeeping items before we get started. Please make sure your microphone is muted during the presentation so we avoid any background noise. Additionally, if you have any questions during the presentation, please feel free to use the chat feature and I'll be sure to address the questions. And then lastly, if you experience any technical issues, please let us know through the chat and I will do my best to assist. If you would like to connect with us, you may do so by email at info@taxpayershelpcenter.com. Additionally, you may email us at any time if you're watching this presentation not live. So once it's posted on social media, you may email us and we'll also address your questions there. Through Facebook, we have our account is Taxpayers Help Center Inc., a nonprofit organization. And then we are located at 9029 Reseda Boulevard, Suite 209, Northridge, California. And then our website is taxpayershelpcenter.com. And our phone number is listed here as well. The Taxpayers Help Center helps taxpayers both locally and beyond. And since the services we provide are free, donations are important in supporting us and in helping the reach of our services. Any monetary donations are greatly appreciated. Additionally, those who can volunteer their time or expertise or spread awareness are a great help. If you would like to make a monetary donation, you may do so at taxpayershelpcenter.com/make-a-donation. Or if you go to taxpayershelpcenter.com and click on the Make a Donation tab, you may do so there as well. Again, anything is greatly appreciated as these donations allow us to do what we do. So today we'll focus on quarterly estimated tax payments for individuals and more specifically who must make these payments, what forms you must use to make them, when you make the payments, where you send these payments, why you make these payments, the special issues regarding marriage, separation, and divorce, estimated taxes for the state of California, and lastly, extensions on these payments related to the California wildfires. So who must make estimated tax payments? This means you owed no taxes last year and received a full refund of any taxes withheld. Or excuse me, so let me focus on this first. So the federal income tax operates on a pay-as-you-go basis, meaning you must pay taxes as you earn or receive income throughout the year. You are not required to pay estimated taxes for the current year if you satisfy all three of the following conditions. So if you owed no taxes last year and received a full refund of any taxes withheld, so for example, if you were a student last year and your income was only from a part-time job that didn't meet the taxable threshold, you wouldn't have had any tax liability. Two, this means if you moved to the US in the middle of last year and became a resident alien, you would not meet this condition and may need to pay estimated taxes. So this is the point. So if you were a US citizen or resident alien for the whole year. And then third, your prior tax year covered a 12-month period. So this means your previous tax year must have been a full calendar year, not a short year, resulting from a significant change like a new business start. So for an example, let's say Rose, a single taxpayer, works as a grocery store clerk. She also works evenings and weekends as a self-employed photographer. Rose expects to earn $30,000 from her grocery store position and $30,000 of net self-employment income from her photography business. Last year, Rose had a total tax liability of $8,250. She expects her 2025 tax liabilities to be $9,250. Assuming a withholding rate of 15%, $4,500 of federal tax will be withheld, from Rose's grocery store earnings. She's not eligible for any tax credits because she owes more than $1,000 after withholding and tax credits, and Rose's withholdings of $4,500 is less than the smaller of 90% of her expected tax liability for the year or 100% of the tax liability from the previous year. So therefore, Rose must make estimated tax payments during 2025. And as I explain more about estimated tax payments, that will become more clear as to the reasoning. So who must make these tax payments? Now, what I just previously said may make more sense. So if your tax liability after accounting for withholdings and tax credits is $1,000 or more. So this means that after deducting any taxes already withheld from your paychecks and any credits you're eligible for, if you still owe $1,000 or more, you should consider making estimated tax payments. And then two, your withholding and credits are anticipated to be less than either 90% of the tax owed for your previous year, sorry, for the current year, or 100% of the tax owed for the previous year, provided it was a full 12-month period. Who must make estimated tax payments? A taxpayer may need to make estimated tax payments if they have self-employment income, capital gain income, other investment income such as interest and dividends, royalty income, or rental income. So, for example, an example of self-employment income is if you have your own business, so you work independently. Some examples are if you are an Uber driver, a gardener, truck driver, photographer. Since they don't have taxes withheld from their income, they need to make estimated tax payments to cover their tax liability. Example of capital gain income is profits from the sale of investments such as stocks or real estate are considered capital gains and may require estimated tax payments. Other investment income, like interest from savings accounts or dividends from stocks, isn't usually subject to withholding, making estimated tax payments necessary. This is the last point. It's money you make that is not subject to withholding. And royalty income. So royalties from intellectual property, such as book royalties or music licensing fees, are typically not subject to withholding, meaning it's often necessary to make estimated tax payments on these. So let's say you make music and the radio pays you a royalty of $1 every time your song plays. You may have to make estimated tax payments on that money. And then rental income is often not subject to withholding, so therefore the taxpayer often needs to make estimated tax payments on it. What forms are used to file estimated taxes? So there are a couple we're going to go through. So first is IRS Publication 505. This provides tax rate schedules and worksheets to estimate tax liability. It's updated yearly, so use the current year's publication for accurate information. Sometimes small changes, including numerical amounts, are made every year, so it's best to make sure you're up to date with the publication you're using. So let's say you started a side business this year. Publication 505 can help you estimate how much tax you will owe on the additional income, and so this ensures you make timely payments. Second, Form 1040. So you use last year's form to estimate current year taxable income and tax owed. So, for example, if you earn income not subject to withholding, like freelance earnings or investment profits, Form 1040, oh, so this is for 1040-ES, helps you stay current on your tax obligations throughout the year. So this one is required for paying estimated taxes by check or money order. And then Form W4 is used if adjusted withholding is needed. So if you anticipate significant changes in income or deductions, updating your W4 ensures your employer withholds the correct amount of tax. So, for example, getting married, having a child, or starting a second job are situations where adjusting your W4 can help avoid overpaying or underpaying taxes throughout the year. And then Form 2210. This may be required with your 1040 to calculate penalties for insufficient or late installment payments. So it's if you underpay estimated taxes or make payments late, the Form 2210 calculates any penalties owed. So it's filed with your annual tax return, which Form 1040. So if you forgot to make a quarterly payment or underestimated your income, Form 2210 helps you determine and minimize penalties while filing your taxes. So here is what the forms look like. So these are not necessarily the correct year. But if you find the correct year ones would be available if you search them up. So here's 1040 on the left, 1040-ES, Form 2210, and Form W4. So when are estimated tax payments due? So estimated taxes are paid in quarterly installments with payments due by the 15th day, sometimes the 16th day, as we see here, of the fourth, sixth, and ninth months of the taxpayer's tax year. The last installment is due on the 15th day of the first month following the end of the tax year. So these dates change slightly from year to year. This year, the deadlines are April 15th, January 16th, September 15th, and then January 15th for the following year. So if you would like to get an extension on these, unfortunately, there is no way to get an extension on these deadlines, even if you have correctly applied to get an extension on your tax return. The one exception is for those who are granted an extension, such as California wildfire victims, and we will talk more about this later on in the presentation because they did make a special extension for those who were affected. Where does the taxpayer send estimated tax payments? One, credit an overpayment of tax from the previous tax year. Any overpayment of tax from the previous year will be first applied to the taxpayer's first installment of estimated tax, then sequentially to subsequent installments as necessary. Two, pay online at irs.gov/payments. You can make estimated tax payments through your online account at irs.gov/account, Iris Direct Pay, which is free, and credit card or debit cards, electronic funds withdrawal, or using the IRS To Go app. And then you can also pay by phone. You can look up the IRS website, which will give you the number, or you can pay by check or money order. So if you are paying by check or money order, you must include a payment voucher. Mailing addresses can be found in the instructions provided with Form 1040-ES, and checks cannot exceed $100 million, and the payment date is based on the postmark date. Why make estimated taxes? If you miss the installment due dates for your estimated tax payments, you may be subject to an underpayment penalty. So the penalty amount is based on the difference between the required installment and the actual amount paid, including estimates and withholding. This difference is calculated for each installment due. And just to note, when an underpayment occurs, any payment made for a later installment will first be applied to the underpayment, and then the remainder, if any, will be applied toward the intended installment. And so by paying these taxes, you avoid penalties, and by overpaying, the money is just moved to your next installment. Why make estimated tax? Individuals do not need to calculate their own penalty. The IRS will send a bill detailing the underpayment calculation and any penalty owed. However, the IRS may not account for special circumstances that could reduce the penalty. So while the IRS calculates and sends a bill for underpayment penalties, they may not consider special circumstances that could reduce your penalty. By filing these estimated taxes on time, you can avoid these penalties and assure that your tax obligations are met throughout the year, preventing unexpected bills and additional charges. So the IRS, as we mentioned, may not consider special circumstances that could reduce your penalty. Situations such as irregular income, natural disasters, or unexpected expenses might impact your ability to make timely payments. So by proactively managing your estimated taxes, you ensure that your unique situation is accounted for and you're not overpenalized. And of course, the exception that we mentioned was for California wildfire victims. Special issues, marriage, separation, and divorce. Married taxpayers can generally make joint estimated tax payments even if they are not living together, except in the following cases. If they are legally separated under a divorce or separate maintenance decree. So legal separation decree means the couple's rights and responsibilities are outlined by the court, preventing joint estimated tax payments. If they have different tax years. So when spouses have different tax years, aligning tax periods is impossible, so they must file separately. if one spouse is a non-resident alien, unless the non-resident alien spouse elects to be treated as a resident alien for tax purposes. So, a non-resident alien can only file if they elect to be treated as a resident, requiring them to report all worldwide income. And then if they're a registered domestic partner, so these relationships, while recognized by some states, are not considered marriages for federal tax purposes, necessitating separate tax filings. So now let's move on to California estimated taxes. So for California estimated taxes, you use Form 1040-ES to make estimated tax payments throughout the year. And so this is used by individuals to calculate and make estimated tax payments to the state of California. And you should use this if you expect to owe at least $500 in tax for the year after subtracting withholdings and credits. And remember, for the federal estimated tax, it is $1,000 in tax liability. The same way you pay a state income tax and a federal income tax, the same goes for estimated taxes. So if your withholding and credits are less than the smaller of 90% of your tax for the current year or 100% of the tax for your previous year. And then additionally, Form 540 is the California resident income tax return. And so this is the primary state income tax return for California residents. And this is used to report all income, calculate tax liability, and report estimated tax payments made during the year. And its relevance to estimated taxes is that when you file Form 1040, you will include all estimated tax payments made using Form 5, excuse me, 5. So when you file Form 540, you'll include all estimated tax payments made using Form 540-ES throughout the year. And this helps reconcile any tax due or overpaid based on your actual income and deductions. And the filing deadline is generally April 15th of the following year. And if you need more time, you can file for an automatic extension, but you must still pay any estimated taxes owed by the April 15th deadline to avoid penalties. And then these are the forms for California. So there's the Form 540, 540-ES, the Form 5505, which is the equivalent to the 2210, but just for the state. Then the Form DE-4, which is similar to the W-4, but again is for the state. So these are the two ways to pay California estimated taxes. So you may do so online, or you may mail to Franchise Tax Board. Here's all the information here. And you can use 540-ES vouchers to pay your estimated tax by mail. Just make sure or make your check or money order payable to the Franchise Tax Board and write your SSN or ITIN and 2025 Form 540-ES on it. And so the easiest option is probably online, but you can always send by mail. And then lastly, we'll talk about quarterly estimated tax payments extension for taxpayers in Los Angeles County affected by wildfires. So the IRS has recognized the immense disruption caused by the wildfires and has granted an automatic extension for taxpayers who are affected in Los Angeles County. So this extension pushes back all major tax filings and payment deadlines to October 15th, 2025. All quarterly payments originally due in January, April, June, and September 2025 are now deferred to October 15th, 2025. This extension is automatic for taxpayers with an IRS registered address in the designated disaster area, giving them additional time to assess their financial situation, recover documentation, and take advantage of available relief options. Taxpayers outside the designated zone but still impacted by these wildfires may request similar relief by contacting the IRS directly. And so just to recap, we talked about who must make estimated tax payments. So this was individuals, including sole proprietors, partners, and S corporation shareholders who expect to owe tax $1,000 or more, $1,000 or more when their return is filed, and then also corporations expecting to owe $500 or more. Then what forms are used to file estimated taxes? So the forms used are 1040-ES for individuals and 1120-W for corporations. When are they due? So they're typically due on a quarterly basis. April 15th, June 16th, September 15th, and January 15th of the following year is um, those are the due dates for the 2025 estimated taxes. However, they change slightly year by year. And the exception is for those who were California wildfire victims. They all get an extension until October 15th, 2025. Payments can be made online through the IRS website, by phone, or by mail using the payment vouchers included with Form 1040-ES or Form 1120-W. And then you should make these payments to avoid penalties and interest charges for underpayment of taxes. This is to ensure that you do not owe a large tax bill at the end of the year. And then for the special issues regarding marriage, separation, and divorce, joint estimated tax payments can generally be made by married taxpayers even if living apart, unless they are legally separated under a divorce or separate maintenance decree. They have different tax years. If one spouse is a non-resident alien, unless they elect to be treated as a resident alien. They are in a registered domestic partnerships, civil unions, or similar relationships not recognized as marriages under the state law. And then lastly, estimated taxes for the state of California. If you owe over $500 to the state in taxes and have to make estimated payments, you need to file it with the state of California. And then additionally, if you were affected by the California wildfires, you may have that extension until October 15, 2025. And even if you are outside of Los Angeles County, you can contact the IRS directly, and they may also give you that same extension. So thank you all for listening. That concludes my presentation. And again, since our services are free, donations are crucial for our support in expanding our reach. Monetary donations are greatly appreciated, as well as those who can volunteer their time, expertise, or help spread awareness. So if you had any questions about anything discussed during the presentation, please email us at info@taxpayershelpcenter.com, and your questions will be answered by a tax professional. So with that being said, thank you all for listening and have a great day.